We've got one company today, but it's a big one. ETOEN's annual report is packed with restructuring, a massive impairment, and a supply chain warning that should be on every beverage investor's radar.
Yeah, this is a lot to unpack. Ticker 2593, significance 4 out of 5. Let's get into it.
Sam, the headline number that jumps out. Net income down 75.5% despite sales growing over 5%. What happened?
A 13.8 billion yen impairment on the vending machine business. Volume and profitability have been declining, and they finally bit the bullet. ROE dropped to 2%. But here's the weird part. They raised the dividend from 44 to 48, pushing the payout ratio to nearly 500%.
500% payout on collapsed earnings. That's either confidence in a recovery or just stubborn commitment to returns. What's your read?
Looks like a deliberate shift from buybacks to dividends as their capital policy. They're signaling that the impairment is a one-time cleanup, not ongoing deterioration.
Okay, but the bigger structural story is the tea price warning, right?
Exactly. This is the most important risk in the whole report. Global demand for matcha is shifting tea production from sencha to tencha. Add bad weather and steady beverage demand, and you've got a supply-demand squeeze on raw tea prices. They're repositioning matcha as a distinct new business pillar and strengthening procurement.
So their core input is getting squeezed at the same time they're impairing the vending channel. Meanwhile, they're consolidating everything domestically. Manufacturing, logistics, even Okinawa got absorbed into the parent.
Right. They merged 2 tea manufacturing subs into ITOEN Tea Factory, bought out the remaining 34% of logistics affiliate Town Legitim, and took vending sub Neos from 92.6% to 100%. It's a full vertical integration play. Bring production, distribution, and retail channels all in-house.
And internationally, they're setting up in Mumbai with Oyocha. That's following last year's European push.
Yes, ETO in India Private Limited, established April 2026. Full-scale market entry. They also restructured cross-shareholdings, dumped Shiseido, Ajikon, and Japan Ski Resort Development, added positions in Ryohin Keikaku and Aeon.
Interesting portfolio shuffle. The cross-holding changes suggest they're moving toward retail and consumer adjacency. Anything on governance?
Added a human capital strategy committee and disclosed gender metrics. 4.5% female managers, 79.7% gender wage gap. Also got SBTI certification with fairly aggressive targets across all scopes.
All right, so to sum up, one-time impairment masks underlying operational tightening, tea price risk is real and structural, and they're betting on vertical integration plus India expansion. Watch whether tea input costs actually bite next quarter.
The tea price warning is the one I track closest. If matcha demand keeps pulling tencha production away from sencha, every Japanese tea company faces margin pressure, not just ETOEN.
Good point. That's a sector-wide signal. We'll be watching for similar disclosures from peers. That's it for today. Thanks for listening.